Now let's find a figure for the purchases as well. So let's assume that we made a purchase of say 50,000 for the year. So this was the purchases that we made, purchases of 50,000. So we began the year with opening stock of 10,000, purchases of 50,000. Now, when we were determining the net sales, we mentioned that there were instances where customers will return some of the items that they have bought into the company. The same way, we can also return some of the things that we bought from our suppliers back to them. Yeah, so once others are bringing theirs because of fault or something, we can also send ours outside. So this one is known as return outwards because we are returning the commodities or the goods to the customers. So the return is moving outside the company or moving outside the business that we are considering. So it is called return outwards. And the return inwards, if you can remember, we deducted from the sales revenue to get the net sales. When we come to the purchases as well, let's say we made a purchase of 50,000 and assuming there was a return of say 7,000, right? A return of 7,000. Now, if there was a return of 7,000, we are no more going to owe our suppliers 50,000 anymore because we bought 50,000 from them and we have returned 7,000. Then it will stand to reason that this 7,000 must rather be deducted from the 50,000 to determine the net purchases. So the difference between the 50,000 and then the 7,000 will be the net purchases, which will be the actual purchase we made for the year because we made a purchase of 50 and we return 7. So the difference becomes the net purchases. So you can name that one on a separate column or you can just bring it here because we are adjusting the purchases to be added to the opening stock. So the difference between this and this, we will bring it right under the opening stock to continue the account. So the purchase was 50,000, then we return 7,000, 43,000. That 43,000 is the net purchases. So probably you can bring it to the next line and then name it net purchases, or you can just bring it in line with this one over here. All of them is accepted because all the two figures are being presented where you are going to get your text. So this 43,000 is the net purchases because we made a purchase of 50, we return 7. So net purchases of 43,000. Now, let's continue. Having this 43,000 and then this 10,000 opening stock, ideally would have been the total amount that's we incurred in selling the commodity. But it's possible that when we purchase the item from our suppliers, we took a vehicle. Okay, there were some vehicles that brought the items into our company. Probably the customer didn't pay for that expenses on our behalf, or the supplier didn't pay for that expense on our behalf. Let's say we travel to a different community to buy the items, and we have to transport them into our company, and that one is called what? Carriage inwards. Well, carriage inwards means the amount that you incurred in bringing your purchases into your company. That's why we call it inwards. Okay, so how much did you incur in carrying your items into your company? That is why the name carriage inwards. So the amount you incurred in carrying the items into your company must also be added because this 43,000 is the money you actually paid. But how much did you also incur in bringing the items into your company? If you don't factor that, you are going to reduce your total cost and that will affect your profit. So let's assume we incurred 8,000 in bringing them into the company. So this 8,000 was the amount we incurred in carrying them into the company. This 43,000 was the actual amount we paid to our suppliers. This is the amount of goods that were available at the beginning of the year. So when you combine all these three, it will give us the cost of goods available for sales. So this 10,000 plus this 43,000 plus the 8,000 will give us the cost of goods available for sales. In short, we call it COGAFs, cost of goods available for sales, is 61,000. In the same way, this 61,000 is the goods that were available for the whole year. But were we able to sell all of them? If yes, then we can go ahead and do our subtractions. But it is possible that we didn't sell all the goods. The same way we began the year with certain goods, we can also end the year with some goods. So we then have to take away the goods that we couldn't sell within the year, so that the difference will actually give us the goods that we sold, right? Because this 61,000 is cost of goods available for sales. It doesn't mean cost of goods sold, right? They were the cost of goods that were available for us to sell, but were we able to sell all of them? If we were able to sell all of them, then we are good to go. But in some instances, you may not be able to sell all of them. So assuming we couldn't sell 15,000 of it, 15,000 of it, then it means that what we sold is going to be the difference between what was available and what was left at the end of the year. So what was available was 61, and we ended the year with 15. It means that we sold what? 46,000. So the 46,000 is the cost of goods sold. Cost of goods sold. So this is the cost of goods that we sold within the year. Now, if you have wages, we classify wages to be a direct cost, meaning cost for people who actually work in connection with the goods. So if you have wages standing alone, that wages becomes a direct cost and it must be added to our cost of sales. But if you have wages and salary combined, then the salary elements, making it indirect, and so that one will be treated as an expense when we begin to look at the profit or loss account. And so if you have wages, which in this case is a direct cost, then that direct cost must be added to the cost of sales, or to the cost of goods sold. So when you add the wages to the cost of goods sold, then we get what is known as what? Cost of sales. So now let's assume there were wages of say 11,000. Wages of 11,000. So this wages of 11,000 should not be taken away, but it should be what? Added, because the 46,000 is the cost of the goods that we sold. And then there were wages, there were some direct labor who worked on this particular goods and then it sells. And so that 11,000 must be added to our cost of goods sold to get the total cost of sale. So this cost of sale is going to be the cost of goods sold plus the wages, giving us 57,000 as our cost of sales. So we can now determine our gross profit, because we say gross profit is the excess of sales revenue over the cost of goods sold. Now our sales revenue is 95,000. Our cost of sale is 57,000. So the difference between 95 and 57 is our gross profit, 38,000. So that is how the gross profit can be determined. So guys, this is it. Very simple and very easy. So if you have not subscribed to our channel, we urge you to subscribe to our channel so that anytime we have such videos, you'll be the first person to have access to it and go through to improve your learning and then your understanding of accounting. When you also keep on subscribing, that is where we get to know that you have interest in what we are doing, and we also give you more of such educative videos. So in the next session, we will look at the profits and loss elements of the whole account. So thank you for watching. Make sure you comment, you share for other people to have access to this educative video. Thank you. Thank you for watching.